because you can basically recognize that financial independence and time sovereignty are not so far apart, right? If you are financially independent, technically you also become time sovereign, because now you can just, you don't have to worry anymore about what other people say.
Hello, I am Cody Ellingham, and this is the Transformation of Value podcast. In this episode, I talk with Sovereign Origin about his concept, FITS, Financially Independent Time Sovereign, a new alternative to the traditional FIRE movement, Financially Independent Retire Early. While both approaches aim to escape the rat race, FITS redefines the pursuit of financial independence through the lens of Bitcoin, focusing on sovereignty over one's time with a unique perspective towards wealth, work, and life. Now, we had a great talk about the FITS concept, exploring some of the technical aspects, as well as some of the challenges inherent in the traditional FIRE approach, which is built on the premise of the ongoing growth of the stock market and ultimately is not truly independent because the state can always come and confiscate or turn off your retirement fund, something they can't do with Bitcoin. If you would like to support my work and growing this show, please consider tipping some Bitcoin to the show's wallet. Otherwise, pass this episode on to a friend who you think may enjoy it. If you have any questions or feedback, please reach out. My emails are always open, hello@thetransformationofvalue.com. Otherwise, on to the show. But how have you been?
Been good. So, Been a while since we met in Prague.
Prague was good.
Yeah, it was good. And I met a lot of good Bitcoiners there, including yourself. Since then I've been holding up, building stuff, writing stuff, and inspired obviously by also that event. So I'd love to talk about it.
Yeah, it was quite energizing, and it was a really good conversation we had around what you've been working on with this concept of FITS, Financially Independent Time Sovereign. And you've shared a little bit with me, Sovereign, around what you're working on there, and I think it's a very interesting concept. So I thought, though, before we get into that, maybe we could start by way of background, as much as you're willing to share, in terms of maybe how you got into Bitcoin and how you became interested in looking at this long-term financial independence aspect of it.
Yeah, sure. So it's pure self-preservation for me. So basically, I must have been around 2017 or so. We got the first kids and realized we didn't have anything to show for saving. So then, actually already looked into the whole thing. I think at that point also learned about FIRE already. We'll get into what FIRE is, I guess. But so, and then also found Bitcoin a bit around the same time. Still it was this kind of strange and digital money, it's not so obvious to just dive in and say, yeah, surely this is the solution, right? Yeah. So, also way before that, actually, that's the typical story where you hear about it, you just dismiss it like something, oh, like, haha, that's interesting, which is where my student colleagues in my university time, they mined something like 0.1, 0.3 Bitcoin or something with GPU at the time. And so that's really early. And they basically threw a party actually at the peak of 2017. At that point, of course, I was already orange pilled. But so I clearly remember dismissing it very early on. And then during the party, I was already orange pilled enough to be like, what are you guys doing? What do you mean a party?
Yeah.
So they were just throwing it all away for a party and not having to deal with it anymore.
Yeah.
And I was just about stacking up. So I guess that was a wealth distribution event right there.
Yeah. And this interest in so sort of self-preservation, and you mentioned FIRE. I mean, just briefly, those two things, maybe people haven't heard of FIRE before, but how would you explain that?
So, as I also write about in the article, so FIRE is very much, actually, in my mind, a fiat concept, right? It stands for financial independence and retire early. So the financially independence part, I think most Bitcoiners can recognize. And the retirement early, we can dive into further, but maybe it's not so much as in what those four words mean, but more how they get there also. So this is just for people that are looking to become financially independent and retire early. And so they do this by basically dollar cost averaging into stock market. Usually some set of world ETFs is used to basically accrue the money printing value that the world puts in there, and using stocks really as a saving mechanism, which probably, as you and I and the listeners know, is just because the money is broken, we can't save in it. And so really what FIRE recognizes, I think accurately, is that money can be used to store value, and especially if you try to accelerate actually what FIRE is about, trying to accelerate this process of accumulating the wealth over your working lifetime, then it works. I mean, it has worked. If you look at like the past returns for typical FIRE portfolios over the past 25 years, the strategy would work. I'm not sure if that's necessarily also true going into the future. And so, yeah, I think at 2017, as I said, I already learned about FIRE. And we can maybe, it's a funny anecdote. So I did at that point buy some Bitcoin, but a year later, I also, as you know, the market crashed and I had my typical bear market depression. And so what did I do at that point? I was like, okay, I guess I'll try these stocks because this Bitcoin thing, and so I actually tried this FIRE procedure as well, where I started accumulating some stocks, mostly world ETFs. Don't worry, they're all in Bitcoin now. But the point is that, I also, you need a lot of conviction, I think, to use Bitcoin as a savings vehicle. It's very tough, especially starting up. And so stocks are safe. They're nice. They kind of gradually, accrue value. And again, it's just we're one step closer to the money printer, and so we get some of this accrued value from the global banking system into our hands because we buy into that system. But yeah, it's not I think we're also fueling inflation. When you're buying ETFs, you're fueling actually the global industry without knowing actually what you're buying into. There's so many stocks behind it and companies. I don't think most FIRE people really go into depth about what they're buying, and also in the sense of the companies they're supporting with those purchases, right? That's just some thoughts. I don't know if that's clear enough for what FIRE is, right?
Yeah.
So it's really just about accumulating wealth over time, doing this faster than what you would if you would just, build your career, have, I guess, your usual accumulation. You put away some savings every month. No, this is really aggressive savings. So it's about, I don't know, some people have 50, 60+% of their wealth or income rather, stored in stocks and basically trying to live as frugally as possible, right? Which, again, we can come back to. I do think generally frugal living, maybe not for all Bitcoiners, most Bitcoiners would probably recognize that as a virtue, right? So I think there are some alignments for sure.
Well, it's interesting. I'm not quite sure the history of the FIRE movement, but I feel like it's relatively recent. And I wonder just how much that maps onto the history of interest rates and monetary manipulation. And I feel like it can't be more than 30 years or maybe 40 years old.
No, surely not. I think it's this kind of internet time. Recent is still, I mean, we're talking probably 2005, 2010 that probably this thing started to happen.
Yeah.
I mean, if you go further back, surely there's people that have always used some combination of stocks to represent the market or indexes in general to basically decouple specific financial choices about which companies you want to support necessarily, which is sometimes also actually a concrete choice that FIRE people, I think, want to make. They don't want to bother having to study the stock market, having to study the companies.
Yeah.
But back to the point, so, I mean, people have been using the stock market as a savings vehicle for a much longer time, of course. And I think when this FIRE ID or concept was launched, it was much more, I think, a retail ID, right? Not about big investors, but about mom and pop investors, where probably pop or mom was more like, oh, hey, I could use this to really accelerate my retirement, even if I get this right.
Yeah. There's potentially also an overlap with the development of ETF technology, because I know, talking to older people, there was a certain expertise required to invest and, to understand the companies and the landscape, and in many cases there wasn't the accessibility. You had to go through brokers, and there was a whole lot of barriers sort of prior to the or not, maybe not before the internet, but sort of, in the early days of the internet and before that, it was hard to just get in on that world. And at the same time, maybe you had higher interest rates in the bank, maybe housing was still seen as the main thing. So perhaps we could associate the broader FIRE movement and this kind of personal finance thing with ETFs and maybe Reddit as a kind of a starting point, and that has become mimetic. And what you mentioned about the frugality is very interesting, because I do know many people who bust out the spreadsheets and are counting every penny, and it seems like it's quite an honourable thing to do, but I also wonder how much of it is a symptom of the money being broken, that you can't enjoy your money,
Right. So I think generally there's a couple of things there to unpack. So frugality. Why are we trying to be frugal, right? In general, I speak for myself again. I think more Bitcoiners would try to be frugal, if not just to stack more sats, because we believe that's going to go up in value and we can store our value in Bitcoin. But I think we want to be frugal because we recognize some level of uncertainty about the future. That's different for everyone. But because of this uncertainty, we want to essentially build up a buffer towards whatever happens, right? I think that's at least my motivation to be frugal. Is just like, if I just spend everything, right? End of the month, the paycheck is gone, and then I have nothing left to show for storing the money into the future. So I think that's also like taking a certain amount of risk. Now, of course, there's another thing that FIRE people generally do, which the first step they'll tell you is, build up your reserve treasury, basically. So they say, okay, maybe 6 to 10 months. Again, they're a very personal choice. How many months of income do you want to basically have in the bank? Whatever happens, you don't need to worry about money, right? Financial independence is also about dropping the worry. Now, I would argue, at least, I don't know about you, for me, 6 to 10 months of fiat in the bank is a horrible idea. It's terrible. And so also, I think there's another thing about uncertainty and future risks, right? Let's say you lose your job. It very much depends on the jurisdiction you're in, what kind of, let's say, safety valve or safety mechanisms exist to keep you afloat. And in some cases, I will actually, without doxing myself, I'm in quite a socialist state, I guess. So if I would lose my fiat mining job, basically I would have a bunch of months of social security. And so, I don't need, for that reason, I would, in my particular condition, not see the real need to store that much fiat just to have like operating expenses. But then if you're in a way other jurisdiction where that's not in place, you probably do. It's a sane choice to keep some money aside. But in general, I think the time horizon there matters, right? If you don't expect anything to happen within 3 months, 6 months, 10 months, then maybe that's already a moment at which you're more relaxed to put that money into either Bitcoin or stocks. Of course, there's a sequence of returns risk, so that money could lose some value, and maybe you want to keep a safer buffer there, right? And then maybe you would opt for stocks instead of Bitcoin. On the other hand, there's also the risk of not being in Bitcoin, right? I think that's really a missed opportunity. So. I try to really minimize this, let's call it a safety fund. But I get the point. And it just is a very personal thing whether you need a lot of that.
Yeah, I've heard, I think people refer to it as an emergency fund in a lot of the personal finance material online. And it's quite interesting because, as you say, that's a huge chunk of dry powder sitting on the sidelines. And I think losing the job is one scenario, but I think also when you look at, say, a medical emergency or something suddenly comes up and you need liquidity,
totally.
That the idea is then you're not having to liquidate your stocks and your ETFs. So it's sort of having that buffer. So I guess sort of wrapping up this picture of the FIRE model, then we've got this focus on ETFs and index funds over individual companies. We've got this emergency fund, and I think the other aspect that I've read about is reducing your debt as quickly as possible as well, right? So
that's right.
Paying down credit cards and student loans, etc.
Yes, although that's a very interesting point about debt in general. I think we can get into that later. I think mostly FIRE people are not so much against mortgages.
Ah, interesting.
I guess.
Yeah.
So yeah, there's something there, I think. I
Yeah.
think mortgages are still the main, like whatever actual money supply type money printing that's happening, right? In terms of volume, you know, yeah, I don't know how much we need to go into this, but the money printing happening by the central banks, it's bank reserve money, right?
Yes.
So that's happening on the back end of the financial system. Eventually, it does release some valves for the regular banks to go and issue more loans and thus actually issuing real money that people use and have in their accounts. But a loan for a house is really directly stimulating somebody else's account, and that's as out of thin air as it can be, just as much. So, yeah, from let's say inflationary standpoint, probably if the housing market is hot, there's some link to inflation with that as well, compared to just the regular money managing that central banks do. And so, yeah, again, I think fire people generally are not actually thinking about what money is, right? They
Yeah.
just want to accumulate the fiat equivalent that they need to retire on.
Yeah, that's right. And I think from my perspective, I sort of have been around the edge of this for some time, and I remember I've had friends talking about it, and I've had friends who have tried to begin that journey of spreadsheeting everything and being very humble and frugal about their lives. But I think we can kind of unpick the dream a little bit, and then we can get into what you're looking at, because for me, I think the status quo and the knowledge of what a good portfolio should look like and what you ought to do, I think that model has broken, and it's been broken for a long time. And you can't just hope to do what worked 15 or 20 years ago. I don't know if that is reliable anymore in this chaotic world, right? Just to start with, I mean, the money has. The state has revealed its hand with the manipulation of money, and as you say, the fire people don't maybe look so deep beneath the surface of what is actually happening on a mechanical level with the money, right?
Absolutely, yeah. So maybe getting into this point about the portfolio, distribution. There's a bunch of like rule of thumb that I think
60
fire
40.
people.
Yeah.
Well, that's even the simpler one, right? That's the typical mom and pop use stocks to save. I think fire people, and especially ones that are a bit deeper in, they do actually look into optimal distributions. They usually have some portion of allocated to bonds as well. But I mean, tiny amounts, and I guess nowadays maybe not anymore. But actually, in the time that fire was launched, they did. And also, how do you distribute across different markets? There's usually some percentage of, let's say, play money. So they play money as in like more risky things, like I'm going to allocate 2% to Tesla, right? This sort of thing. So maybe even Bitcoin now become a more mainstay. I do see fire around in the community, so I think people are obviously waking up to that. I just worry that these people are still short Bitcoin, probably. If you're following the fire paradigm, it probably means you've put a whole bunch of money into stocks. And again, I think as a Bitcoiner, we can question that. We should question that and say, okay, there's probably better ways to think about this in the first place, even before we just dive in and do what everybody else does, right? Which is what I think fire at this point has become very mainstream.
Yeah, well, it's also become a bit of a cargo cult, I think, where, it's maybe it worked once upon a time, but even now, if I look at what happens in many countries, in New Zealand as well, there's almost been this fire by default where there's government-run schemes such as KiwiSaver that we have in New Zealand, where your employer contributes money, and those go into funds which are predominantly ETF focused or some sort of index fund. And it's actually really hard to get out of that and to opt out of that system. And that was because there was sort of nothing in place prior. And so you had a whole generation of people coming into retirement with basically nothing. And so it was sort of like, the government is now on board with this concept. And you have this ridiculous development of these massive index funds, which don't really track anything. They're just sort of generally floating along as the monetary supply sort of increases, and they sort of follow that, as you say. So there's sort of this cargo cult that everyone seems to be jumping in on with fire.
Now, maybe one counterpoint to make. So I think actually many countries limit, especially pension saving plans, to only invest in, let's say, more local funds. So those are not necessarily well great performers. But of course, for the state, it's interesting because you're just funding the local economy, right? Basically, companies within the local area, and they get now basically by decree a number of amount of percentage of people's incomes flowing directly towards funding these companies. And indeed, it's usually really by decree. It's not by choice. And these pension funds are very often not opt in. They just, it's automated, it's expected. I much rather just get more fiat and store it in the actual place it should go. So I think there's actually a lot of persuasive power that indeed is in there. That's as a Bitcoiner, I really don't agree with. I think in the US probably there's a bit more freedom there. At least I'm not a specialist. I'm just hearing people, always putting their 401ks into Bitcoin. I don't even probably understand what that means. The point is that they get some flexibility. It seems about like, okay, my employer is doubling up the amount of money that I put in, and then all that money can be directed by me. So there's somewhat more control. Whereas in I would guess most jurisdictions, that's not the case. And you actually don't have any freedoms, exactly like what you describe.
Yeah. I mean, that's it, though. Again, responding to that with, say, the New Zealand example with KiwiSaver, you can move around a little bit and you can change your fund. Okay. And interestingly, there is Bitcoin exposure available within New Zealand's KiwiSaver framework. But interestingly enough, what it does is it rebalances because it's quite risky in the eyes of the regulator. And so they've been forced to have to rebalance. And so you actually miss out on some of the massive gains. And, when Bitcoin moons, it readjusts. And so you sort of get this mellow, kind of watered down exposure. You don't get to ride the bull, unfortunately. So either way, it's the old school way.
It's not too bad. It's not too bad, actually. I mean, I think if you consider, and many people have talked about this, I think there's this, I don't know what his name is, but I think the Swan guys have this great tool online as well, where you can like mix up a bunch of assets into your portfolio and see how it performs. And of course, showing that if you have a certain percentage of Bitcoin, that you can outperform, a regular portfolio. And so I think that's the fact that it's even available and maybe even automated, that's probably already better than most places, really.
Yeah.
So.
But I mean, not to pump the idea of this too much, though. I mean, because I do want to get into what you've been working on with FITS and this idea of sort of taking this base concept that exists within FIRE and applying a Bitcoin lens to it. So maybe we can dive into that and go with that. So tell me more about FITS and how you developed this concept.
Right. So, as I said earlier, FIRE is financial independence, retired early. The FI part, I think, as Bitcoiners, we can be happily agreeing with. The retired early is a bit more controversial in my eyes. The financial part, as we said, also how to get there, I think we can debate and we can have a more thoughtful way to get about that and reflect on what the FIRE way is. So in summary, I really see FITS as this nuance. So in FITS, the TS part stands for time sovereignty, because I think ultimately what retirement is about for most people is about getting back control over their time. And ideally doing that as soon as possible. In other words, FIRE is trying to get out of the rat race and try to regain time sovereignty, not really retirement. I think probably most FIRE retirees also are probably still doing something. I guess in Bitcoin, though, this concept of proof of work is really like we should try to get stuff done, right? I think we're generally individuals that are looking to make a difference, whether that's in a very micro scale, such as just, providing for our families, building a stable source of wealth and means to, to persist in the future as a family, or even beyond that, maybe start up commercial activities that you think are necessary in the local community, contributing to cultural and sports and other things that maybe fiat is not always attributing the right amount of funds to, and we recognize that. So I think there's many, many ways in which we want to start to do things that we just can't get around to because we don't have the time to do it. We are captured in this have to work 40 hours per week or whatever, that might be for you. So I think escaping the rat race is very much important. The reason why we want it, maybe not so much the same between FIRE and what I just call FITS, right? So taking basically the retirement aspect out of it, because it's probably not really what it's about. It's probably about actually controlling your time just as much as your financial independence.
Yeah. Well, along those lines, something that always struck me about the FIRE concept and basically being prudent is that, when I was younger, back in my day, I thought, fuck it, what are you going to do with your life? And the first, say, 10 to 15 years of your working career actually really set the trajectory of what it is that you do and where you end up. And you can play it safe, but you miss out on a lot of returns. And I personally made the decision to go and move overseas and put everything on the line and do some crazy stuff. And that set up, a momentum and a trajectory that I don't know what it would have been like if I had just stayed in my hometown in little old New Zealand. And as much as I love it, it's a very different paradigm. And I think there's this kind of risk-reward aspect to frugality, where if you're not actually putting yourself out there, the opportunities never get the chance to even meet you, let alone be taken. And that's speaking from me with a certain kind of personality, but I wonder for how many people this idea that they need to just save and keep their head down has actually limited their personal growth, and they're just sort of in this suboptimal self-development process potentially.
100%. Yeah. So I think if you consider the typical fiat job, right? It's, you go in, you do something, in my case, it's clearly a desk type job. Won't divulge more details, but doesn't matter, right? It's like you go in, you have a set of tasks laid out for you. Maybe you have some autonomy about that, as long as it's within the company interest. And basically you have somebody to report to. That's true both for the CEO, the middle manager, and the lowly grunty getting the stuff done employee. Doesn't really matter. All of these people have somebody ultimately to report to, which means that the time spent is not for you, right? It's really for the company's benefit. And that might or might not align. I hope you're trying at least to be in a company where the goals of the company roughly align with your visions. But in any case, it's really not in your interest, and everybody's replaceable. Also from all the way down to all the way up. So as long as we have this debt relationship to money, where we need to have, the mortgage, the car, whatever else, renovation stuff, things that basically tie you down, you're stuck with having to go in and get out and spend these 40 hours just to keep this lifestyle going, right? It's really, what do they say in the US, living with the Joneses, or right, trying to keep up with the standard that everybody's trying to do. So I think culturally also we're captured very much by what was expected of us and what is normal. And that's what we are trying to do. So in your case, when you're like, okay, I'm going to go out on a limb and I'm going to try to change this rut, right? And take a risk, then yeah, surely there's potentially a lot of reward. Also, not in the slightest of time. Right now, you're probably doing much more things that actually are much more rewarding, and that you would never indeed, as you said, you would even have come across the opportunity if it wasn't for going outside of your bubble, so to speak, your cultural and normative bubble of the way life should be, according to everybody else.
Yeah, well, I think there's an unfolding opportunity space and a sort of tree of decisions that open up when you start doing stuff, basically, and you have this kind of active role in understanding your fate and sort of what you do next. And I think the other lens we can look at this through is the changing nature of work itself. And for me, I mean, we talk about the 40-hour thing and the 9 to 5. I think that's been a legacy thing for a very long time. I mean, we've been in the gig economy for 10, 15 years now. I don't know anyone really who has a normal job in the sense that they clock in, they clock out, they've got a job forever. Everyone's expendable. Firstly, lifetime employment is gone. And on top of that, I mean, we can go back to some concepts, things like wage slavery, which have been spoken about for a long time. But all of these things managers the grunts who do the work. All of these things are a legacy of the industrial era. And as a sovereign origin, I'm sure you're familiar with the sovereign individual thesis and this idea that the means of production are reflected in the political structure. And I think what we're seeing is that is finished clearly, and we've got now the information age where one person can be on a computer and build a SaaS product, or they can build a business, and that is incredibly valuable. And it doesn't matter how many hours you put in or how many widgets you produce on the production line. That dream is long gone. In fact, I don't. It's not even my parents. It was like maybe my grandparents had that dream, but I don't think we're going back to the factories. And so we're already in this brave new world. And so the nature of the connections between people and the asymmetric opportunities you get from meeting somebody like yourself at a conference that you've traveled halfway across the world to be at, or just by being in the right place at the right time, those have a much more powerful weighting in your future outcomes than the stability of just playing it easy and just keeping your head down.
Yeah, absolutely. Yeah, it's look, I think we have to also reflect, right? I think as Bitcoiners, we are maybe one step closer to awareness about the world's conditions somehow. And we try to look at things in a more interconnected way. If you consider that probably most people are actually still wage slaves, if not worse, in the world today, right? I think what you're describing is the typical Western, let's call it Western or first world economy type employment where you're totally right. We won't go back to the factories. We will definitely have, let's say, more comfy jobs in general. And we can, indeed, it can be in and out. Maybe you'll have short, as you referred to the gig economy, right? Short engagements. Or maybe you're already naturally more inclined to become self-employed, either for such a software as a service type thing, or any other type of gig, let's call it. But I think many places in the world that's not the case. You still have a majority of the people actually captured by definitely the wage slavery system. And so I think Bitcoin helps in general. That's not to say, the typical Bitcoin fixes this. I mean, it's just fixing the money. Doesn't change that somewhere goods need to be produced. But probably we reach this more equitable outcome where eventually it's only going to be incentivizing general population moving to the same type of jobs that we are actually already in, most likely both of us, and having also other people giving this opportunity, and where automation becomes still much more the norm, where we don't need to exploit humans for their time and for their labor on something that's completely, and that's again the sovereignty aspect, right? Completely against what they're actually interested in spending their time on. Because time for all of us is an equivalent scarce asset, right? So coming back to the FITS concept, I think if we could only store our time to basically accumulate time so that we store it for later and can get that time back for our own purposes, that would be great, right? That's something that today is really lacking from, I would say, the majority of the world, where there's really a lot of exploitation going on, and that's probably not true for, like, we can just do the 40 hour per week. I'm going to refer back to that, but also the 40 years kind of employment, whether it's in a gig economy, self-employed or otherwise, but still on this rat race, and survive through that. And we'll have some amount of pension at the end of that to have a few years of entertainment, let's call it, or freedom, if that's what it is, because even there I think we can debate. But the point is, most people actually don't, right? They will have to work much harder, much more hours, maybe much more years, because there is no social security, there is no way to build up wealth, and then they are at the behest of their family members to take care of them after they're really incapable of contributing to society, right?
Yeah. So there's a couple of things there I just wanted to mention. So, I mean, I sort of half in jest, I did mention wage slavery as a concept. And I think we do need to be a little bit careful about talking about it in terms of exploitation, though, because that does have certain connotations. And I think there's a deeper question around the purpose of work and what it means to work and be industrious. And a lot of this is tied up in perhaps religious practices, the nature of human relations. And I can certainly speak from experience knowing, older retired people who have go on and do volunteer work or just take basic jobs just to kind of go out into the community, etc. And so I think we need to be careful that we unpick the exploitation of the system in terms of the worker bees and the bosses. That's one aspect. But I think the bigger exploitation really we're talking about here is the debasement of the money, which leads to a certain kind of feeling of desperation. And when people are desperate, they will do what they have to do, right? And it's not necessarily it's not a pleasant experience.
Exactly.
And so I think there can be a place where people, work hard and they bust themselves to do something for a vision, but they're also able to save that wealth as well and do well and sort of excel. And at the moment, it's hard to do that, and it's hard to put the money away. And so you're just sort of working, but it's just empty. It's sort of there's nothing on the other side of that. And there's a nuance there that I think is a little bit hard to articulate, but it's really quite different to what it once was like, where you had the dream that you could work hard, build up some wealth, build a family, buy a house, all of these kinds of classic things. Now it's like you just have to do that, but you don't get any of those nice things as well. You just got to do that to stay floating, So just throwing a bit of nuance into that.
Yeah, I agree to some extent. I think the word exploitation clearly has a connotation that you can interpret differently, but at the core, I think it's referring to basically something being taken from you against your will. And I think indeed the reason or the root cause for that thing being taken away might not be really directly the employer's bidding or causing that. Indeed, the money is probably very often at the root and causing this desperation. But very much when you don't have any other choice but to go and sell your time for something that you would not really do if you had another choice, I still think it's a sort of exploitation. But surely it's not as if nowadays we're all at the whip or something. Yeah. We all have choices. We can always, depending again on the social security in the state, we can decide to, take an easier job for less pay, or we have some freedoms in that sense. But I don't think stopping altogether is really a possibility. And nor does it have to be. I think if you live in a first world economy, I think you very much can converge to a job or jobs that actually also align with what you want to contribute to society, right? And there's definitely value in that, and there's nothing wrong with work, right? That's not the point I'm trying to make at all. I think it's really in the more extreme cases, right? We do see inflation hacking away at your ability to indeed maintain and stay afloat. So, there's this typical story that, my grandparents bought a house for, I don't know, let's say 10K USD equivalent, and now we're paying $1 million, and it makes no sense, right? That makes absolutely no sense because in absolute terms, and we can get back to the debt mechanics here, I guess. So the mortgages require down payments, right? Down payments are percentages usually as a sort of risk control lever for the banks. So clearly, I don't know, 10% of $1 million is way more than 10% of 10K, even though it's just 10%. And generally the income has stayed much more flat with regards to the housing market, right? So that means it becomes harder and harder to accumulate this 10%. And indeed, as you say, we can't have the nice things. We can maybe, if we're lucky, we also get our significant other to go and work. And so now we have two jobs actually doing the same thing. And in some cases, in the US, you're hearing about like people having to do multiple jobs. I have no clue how people manage this, but it must be extremely tough. So trying to just stay afloat, right? And I don't know what staying afloat there means. Is it like still, in many cases, getting the rent at the end of the month? Or is it really like still having some margin to build upon towards your future. And I'm hoping, of course, for many people that's the case. I think in reality, that's just not the case. And that's why I think the word exploitation is relevant, because it's about choice. So there's just a spectrum, and probably we're at the higher end of the spectrum with lots of freedom of choice about the work we do, where it's more we can choose options that are more aligned with what we want to contribute value for in society, where in the other extreme of that spectrum, there's absolutely no choice. And you need to stack multiple jobs you're unwilling to really do if you had the choice. And all just to make ends meet. So there's clearly a spectrum, right? That their nuance is important.
Yeah, that's right. And I think I've just been reading The Price of Tomorrow, Jeff Booth's book, and he outlines a very interesting argument for deflation in technology and the role of things like AI to really reduce the need for human labor in a way which the Industrial Revolution did that in terms of the amount of people who needed to be working on farms and doing the back-breaking work out in the fields. That changed, and there was this movement into the factories and this progression. And I think there's actually a very interesting, maybe bigger topic here about the development of economies and the relationship between economies, as we're seeing potentially a deglobalization and a move back towards maybe a little bit more isolationist states. What does that mean for supply chains as they sort of pass the baton between them from farming to manufacturing to services and information economies? And we're seeing that in Asia right now. What are the countries that are actually making the clothes and the low value products? It's sort of moved around over time. And that is a very interesting story, because it's sort of where does the buck stop, and what is the relationship between all of that? So I think that's much bigger than this conversation, but certainly interesting to look at that through a Bitcoin lens and a monetary policy lens as well.
Yeah, absolutely. It's interesting, right? You look at your clothes, and at the back of it says "Made in Malaysia," "Made in India," "Made in China,"
Bangladesh,
and surely indeed that's been. Let's call it open marketplace, right? Of human labor that basically it moves to the lower resistance. It's currency, right? It's like electric current. It'll flow to where the resistance is lowest to produce the least amount of voltage stress, which is the pressure basically upon society to produce these goods. I think, look, in the end, we sell time for fiat. And that's definitely true for people that are actually in the factories making these clothes and other products. And indeed, there's this tendency for technology to try and replace as much as possible. But as long as human time is actually cheaper than automation, I think even though AI will exist, because, we've had the Industrial Revolution, but there's still a lot of manual labor, right? Means that it wasn't economically feasible to replace those humans with machines yet. I think the same is probably going to be true for AI. There's definitely it's seemingly super low cost thinkers, right? Except that same thing holds for power. We can generate the amount of joules in a day as a human. That's really insignificant. Compared to the amount of fuel that you'd need to burn to get the same out of an engine, or to get the equivalent electric power to have a robot do some amount of physical energy displacement, let's say. So I think in the context of AI, yes, it'll be very low cost, just like the machines are very cheap actually, if you think about the amount of work that can be done by them. However, as long as there's some human willing to do the same thing for less, that market will remain active. And that's what we're seeing indeed with these Asian market shifts. It's just about where the world is desperate enough, have no other way out than to build these scale of human economies of labor, right? Even though you could automate probably all of it, right? We're 2024, like we can catch a rocket now coming out of the sky. I think we can probably automate a lot of stuff, even though that's technologically not a very good comparison. But Many things aren't automated, not because it cannot be done, but because it's not economically interesting to do so.
Yeah, that's fascinating, and I think also looking at this kind of idea of development studies and sort of what it means from the other side, because we can look at it from our perspective, but for people who maybe have the option between the factory and the farm, you know, the factory represents a lot more stability. It represents a lot more opportunity, and so there's sort of I guess a degree of privilege in judging that. You know, it's an argument that's been put out there around the idea of sweatshops, which are certainly better than maybe slaving away on the farm, for example. And I'm not an expert at all. I haven't read into it too much, but certainly have read enough to see that there's an argument for the other side of that. That, you know, everyone, no matter what their station is, sort of is trying to better their position. And it's sort of, there's no universal thing. It's all subjective as economics is. So yeah, if there's an opportunity to come in and do the job for cheaper than a robot, then go ahead, because that's going to help you put your position forward and do better for your family. And ultimately, hopefully the idea would be that you can save some of that value, you know, that you're putting away, and it doesn't get melted by inflation, which unfortunately a lot of these poorer countries have major issues with inflation. So there's sort of I mean, we're going down a rabbit hole there, but there's a whole thing there around that kind of pride in work, being able to save, being able to provide for your family, and trying to better your situation, right?
Mm-hmm. Yeah, and absolutely. I mean, the AIs of this world will continue to have, you know, more labor market share. So yes, there will be people basically displaced into doing other things and maybe forced into things they wouldn't necessarily choose for. And on the other hand, there's nothing wrong about trying to keep your family afloat. So, yeah, I agree.
And so on that note, then coming back to FITS, that, you know, this is potentially one of the tools that people can look at, because it's actually quite a lot more accessible than fire, because, you know, that is actually quite a privileged thing with fire. To be fair, you know, it really is a US centric thing. You know, New Zealand only recently really started getting the tools that anyone could use to play with this sort of stuff. And so if other countries haven't even got developed stock markets or access to the technology and the platforms, what are they going to do? But as you know, with Bitcoin, you know, anyone can use it, anyone can stack sats. So there's actually a lot more equalizing forces at play there, a lot more opportunity available. But coming to the technical side of FITS, you shared with me a model that you were working on around projecting some of the returns and these kinds of things. Is there anything, I guess, on a technical side you'd be able to share around how you see FITS working?
Yeah, I think DCA is the way. I think actually maybe it's also important I highlight a bit on why I put all this FITS stuff together. My main motivation, indeed, is to be able to educate and to show what Bitcoin can offer anyone, right? So most Bitcoiners probably are already way deep in Bitcoin, and you know they can DCA some more.
Yeah.
Sure, right? Like do the things that we know how to do, but we already know how to do them. So that's also why I started from the FIRE concept. I think it's more of a fiat concept. It's more of a normie concept, even though it's still a niche concept, to be sure. But basically, if you explain FIRE to someone, people will understand why someone would want to do that. And I think that's then an entrance to say, okay, but how are we going to accomplish this financial independence? And why am I actually doing it, right? I want to basically start there and allow people to walk through some educational path towards understanding Bitcoin better, understanding why they're doing it and how they can do it. So technically, coming back to technicals beyond DCA, right? I think the key recognition is that, you know, Bitcoin is a mechanism that, you know, it's not debasable. Therefore, it can be a proxy of time. If you think about all the humans in the world, add up all their lifetimes, right? That's some amount of time stored in our human existences. And so you could take 21 million and divide everything by 21 million. Definitely there's stuff. There's also time, right? If money is the thing that we work for, then definitely you can denominate all this time in sats. And so I think working for sats and having sats as your baseline time proxy will allow you to store time that you're looking to actually obtain. because you can basically recognize that financial independence and time sovereignty are not so far apart, right? If you are financially independent, technically you also become time sovereign because now you can just, you don't have to worry anymore about what other people say. And so, yeah, I think that aspect, right? So getting people to onboard into the idea of stacking sets and yeah, accumulating their time instead of thinking about money as this independent goal, right? It's the same thing. You can save money to later get freedom of your time. And maybe to dive a bit more deep into some other technicals about, what I call financial independence. So if you consider again, back to the rat race, right? You have a dependency on salary, and eventually you may become dependent on a retirement plan from a government or a retirement plan paid for by an insurance company paid for by your employer, but paid out by an insurance company. Those also have a certain amount of friction, right? The government can decide to not increase the pensions, and so in fact we see this a lot now going on, literally as the basement happens, that interest rates go down, and pension funds just can't afford to raise their pensions, and so who gets the fixed income basically gets cut, right? And the same is true for the such insurance plans from the inflationary perspective, right? Let's say I tell you that this insurance plan will give you, I don't know, let's say 1 million, right, in 40 years. Well, great. They will guarantee that, and they'll probably, do their end of the insurance shtick to spiel to get the 1 million stored up for you at a certain risk that they take. So fine. The problem is that 1 million, right, isn't worth anymore what it's worth today. So I think many people also take risks by depending on such third parties to pay out their long-term. They're still dependent, actually. That's my point. So financial independence, it's actually, let's cut out these middlemen. We don't need them. We have technology now. It's called Bitcoin, and it allows us to fully sovereignly control our finances, and including the aspect where that finance represents the time in the future, and we can get by without pension plans or without insurance companies. They're definitely different products, right? I'm not saying that there's no room for insurances or pensions in general, but it's important to recognize that Bitcoin can be a proxy for time, and as such, it's gonna, I think, replace a lot of these type of products for many people.
Yeah. That's interesting, that your comment about the dependence aspect of this, because it's not truly financially independent if there's a major economic crisis and the government by decree freezes the pensions, or it puts a fixed cap on it, or they somehow mess with it, and that is kind of stands out to me in the case with Japan where I live. There's the pension system here, and everybody I know knows that it's not going to be there for them when they retire. Like, all of the old people now are getting paid out by the young kids today, but it's kind of like any way you can to opt out of that or not contribute, people pursue, because they know it's not going to be there for them. And it's sort of kind of like the massive rug pull of a pension scheme, and all it takes is one crisis, and it gets frozen. There's a special order, special decree, and that's it. You can't withdraw your funds, which you've been waiting on, or maybe there's a tax, because a lot of these things have tax benefits or they're tax advantaged, but they could just take that away and say, well, if you're going to withdraw from this fund, you're going to suddenly get a 80% tax. That has a pretty significant impact on all of your models and all of your planning, but it's a bit too late by that point, right? Mm-hmm.
So I think the taxes are also very interesting, because indeed they try to incentivize such pension saving plans through reduced taxes, and that other things are taxed a lot to try and incentivize those things less. Recently, I think Italy announced this a ridiculous tax on Bitcoin capital gains that surely will lead to some Italians stacking less sats. It's a really a control mechanism is what taxes are. And so, yeah, I think, there's a whole libertarian debate about how much tax should we lever on which things, or none at all, or right? How much of our financial capital of any society in any state do we need to attribute and centralize in one place for other people to decide amongst themselves what to do with those funds? Clearly, again, in Western societies, there's this more normative culture around having taxes, right? Most people would not debate that we need taxes. And even if there's more taxes, I just had somebody yesterday tell me, like, yeah, the inheritance tax is the fairest tax of all because at least everybody dies, and so I can tax work, and then less people will work. I can tax inheritance, and it's equalizing, right? It's fair. Everybody will die. Everybody gets equally taxed on their assets. And I'm like, yeah, but you've already been taxed on that. How is that fair to tax you again, right? Even though you've passed away, they're stealing from your children, right? Is this fair? So taxes in themselves are a very interesting mechanism, I think. So yeah, we'll see how it plays out in the future, but I think we'll gradually see more, trying to basically close this escape valve that is Bitcoin, unfortunately, by means of taxes. And I think, yeah, people like you and me, we are probably open to the idea of jurisdictional arbitrage to just say goodbye. By the way, there's exit taxes as well in many cases. But, yeah.
Well, I mean, this brings up another thing that I've been thinking about. So this idea again of retiring early, because for most people, there's sort of these valuable years of your youth where you can do stuff and set yourself up, and having kind of mini retirements is a really interesting idea. Where, what would a day a week mean in your 20s or your 30s or your 40s compared to 5 days a week when you're 70 or whatever. And it's like I think there's a real time value on those years closer to your younger days, and we sort of have it the wrong way around, where people are working so hard and they're doing the frugal thing in the young years, and then they're expecting there's a payout at the end that they can retire early. But I think, looking at my own situation, I think being able to have the freedom to choose what you work on, to be able to travel, to meet people, to have even just 1 day a week or more to do your own thing, that's incredibly liberating, and it's very good for the broader culture as well, because you can create, you can build a new business, or you can have an idea, and you've got the energy for that. And I think maybe there's something in there, this myth of the 40-hour week and these kinds of things. Like, there's not much left, man, after doing that to really come and build a new business or build something profound, right? And so maybe with Bitcoin, you can start changing the way you approach wealth and time allocation as well.
That's a great actual concept that I hadn't given much thought. I think indeed, and we see this actually, at least where I'm located, I have colleagues that work part-time, do so out of choice. Maybe their significant other earns enough as well that the sum of incomes is already plentiful, and so they decide to basically cut back on income, right? I think in general the FIRE movement probably would opt against that, because we need to stack harder, whether it's, in their world, the funds, or in our case, Bitcoin. I think, also recognizing how early you are to Bitcoin, probably, like, it's an incentive at least to try and stack harder. I would hope, at least for me, it's definitely the case. So I think, yeah, your time's now worth more because you're younger. On the other hand, it's also worth more because you can be more productive. So I see there's a contrast there. Probably when you're 70, it's much harder to still be as productive than it is today. And so, I think there's definitely personal choice there as well. And it just depends on your situation. If you're very well able to stack sats, if you're well off, then maybe you can give back some time. Also to the point of, like, after 40 hours, you have not much left in you. So maybe to come back to this thing that I've shown you at the conference as well, is this simulator tool that's completely built in post-fiat hours. So it's also maybe interesting to explain what that is. It's a tool that I developed It's not yet publicly available, although I'm really strongly considering to make it that. It's a fits simulator. There's very often these fire simulators where you say, okay, I want this much income and I want to have that in 15 years from now, whatever, and then they'll just tell you how much you should be stacking, something like that. And so it's not exactly that simple. My simulator is a bit more advanced. So it does allow you to put in the basics, like I have a timeline, and then I want to, accumulate a certain amount of dollars worth. Everything is denominated in dollars for simplicity. But so you put in, let's say that you could stack, I don't know, $1,000 worth per month, or per 2 months or per 3 months, whatever, granularity you want to build in there. And then also on the withdrawal side, right? So when you want to start to become independent, you'll live off the Bitcoin is the assumption. And so you'll withdraw a certain amount, or you borrow against your Bitcoin to still survive this withdrawal period. Another interesting debt mechanism we can discuss. But so there's different ways you could live off Bitcoin. And the simulator supports both. Now, this is all nice, but how do you go and project into the future whether you're going to hold up with whatever amount you've stacked? These fire simulators, depending on, basically it's this number of assumptions, right? I assume there's a sort of CAGR, average growth per year over a long period. I assume that, it's the variation of the portfolio is flat enough so that this is a kind of, you can actually withdraw roughly the same amount in percentage terms every year, for example, to live off. Now, I think with Bitcoin specifically, the future is much more uncertain in terms of price, right? What does ultimate scarcity mean, and how will that monetize other assets? Again, there's tools that allow you to build your own model. I think recently Mr. Saylor himself has published a model. Must admit, I yet have to look into it, but it's probably similar to this Swan tool that I already mentioned, where you can basically mix up some amount of assets being absorbed by Bitcoin and that giving you some prediction of the value of Bitcoin over time. And so, to come back to my simulator, right? It's more simple than that as of today. Maybe I can incorporate some of these models later, but for now, it's supporting linear growth, stock to flow, and power law models. And for the latter, it's min, mid, max. So there's this. I don't know if you've heard of this model, but it's basically showing some amount of in logarithmic scale, a sloping yield over time. Yield, I mean, the increase in price. There's no yield in Bitcoin; you just buy. But so the point being that. Those models are all straight lines. And straight lines are notoriously not representative of what Bitcoin really does. So what I've built, and I think is really the difference between a typical fire simulator as well, although advanced fire simulators do something like it, I guess, is the ability to add volatility. So on top of the straight line, you can add, the price going up and down in something that resembles what Bitcoin has done in the past. And so I think this is more important in fits than in fire because of what we call the sequence of return risk. So every time you need to withdraw, if you happen to withdraw in the bottom, you're going to have to sell off a lot more Bitcoin than you maybe would have otherwise. And so compared to the straight line, any amount of volatility on top of it will degrade the portfolio resilience. And the more volatility, especially if you just withdraw in a regular pattern, it's also like DCAing out of Bitcoin, right? That's another way to look at it. But still, you'll have a pretty high chance that there's a bunch of bad hits there. And if those come early on, then maybe half your stack is gone way faster than you'd hope. And this just adds to uncertainty and more, I think, paranoia, whether you're going to actually last with that stack. And so I've built this tool to basically also help people understand that, okay, if I'm going to do this thing where I try to live off of Bitcoin Standard, I need to make sure I can actually live through this volatility and build a portfolio, which is just Bitcoin, but resilient enough to withstand, even the worst case model that you could probably throw at it. And I have only bullish models. I guess there's no scenario where Bitcoin goes to zero. So yeah, disclaimer. That's what the simulator tool is doing.
Yeah, well, I look forward to how that develops and whether you decide to release that or add some more features and do some more work on that, because I was also reading through your website, and I'd love if you could share just the name of the website so people can find it.
So the website is bitcoin.fits.money, because Bitcoin fits money. It's hopefully easy to remember. So just go there. There's links to the article that we discussed, to I think some other small resources at this point. I'm trying to grow this site's content over time as a sort of educational place. So you can basically also join our Nostr community. It's probably a few people at this point, but not that many. So yeah, it's all very new.
Yeah.
But I welcome everyone to click join. Join Nostr in the first place to create freedom technology. You can also find me at Twitter at Sovereign Origin under the same handle in Nostr as well. That's where I'm spending most of my time nowadays.
Yeah.
If you really are interested to play with the simulator, then hit me up with a DM on any of these, and maybe we can get you as a kind of trial access, if you will.
Yeah.
I do look forward to get more feedback on it, to understand how people want to use it.
Yeah, no, I think it's really interesting, and I appreciate you sharing what you're working on, because for me this really sounds like a very interesting project where it can fit into maybe what traditional financial advisors and kind of TradFi people are talking about, and the way you've used language and the way you've developed it seems like it's a very good bridge. It's very nice to have something like that you can share with people, because we talk about volatility, but man, the volatility in the current model is not being talked about, and I don't know if it's been priced in that whole thing is about to fall over potentially. And so you kind of know what you're getting with Bitcoin. There's ups and downs, but if your entire wealth is stored in this inflated stock market that is a product of a zero interest rate environment over the last 20 years, what happens when that changes? And that could leave a lot of people out in the rain. And Bitcoin, you can look at it for yourself, but everyone has to make a decision. Which way do they want to go, or do they want to have some sort of mixture? Is that the new 60-40 potentially? I guess once you learn Bitcoin, it slowly gets closer to 100%. But sort of unpacking this idea that what has worked until now maybe won't work in the future.
Yeah, if I could add to that, right? So why would you be 100% Bitcoin? Look at the simulator. If you look at its results. So you also mentioned FIRE, or let's say retirement. Maybe the content of that retirement, that is this myth that's no longer available. But I think FITS is very much available to us. It's about storing your wealth in Bitcoin and doing this for a long enough time. But that time is not so long. So when FIRE first came out, they were arguing, you can get this independence in 10, 15 years, right? And now I think that's already probably a pipe dream for most, unless there's very extreme circumstances. But with Bitcoin, actually, it's sound money. Anybody can save their time in Bitcoin, and you can use the tool to show you that if Bitcoin just roughly does what it's been doing, but even with some of the diminishing returns, and even if you take a linear 15% growth per year, which is terrible given what Bitcoin has been doing, so it's very pessimistic, then you can still make it within a reasonable time frame, and reasonable there being that order of magnitude, 10, 15 years, which is not 40, right? It's a big difference. And you're working for yourself, not for the tax man or
the state.
Yeah.
Well, look, that's really awesome, Origin, and I appreciate you sharing this project, and I look forward to seeing more. So, you've shared where people can find you. I'll throw some links into the show description as well. Is there anything else you wanted to add, though, just while I've got you?
Stack set, stack time.
I love it. All right, man. Thank you very much.
Thank you so much, Cody. Talk soon.
Thank you for listening. I do hope you enjoyed the show. I am Cody Allingham, and that was The Transformation of Value. If you would like to get in touch, please send me an email at hello@thetransformationofvalue.com, and I will get back to you.